The Treasury Bills market has been calm today as traders react to today's CRR debit by the central bank. However, traders have repriced bonds higher in expectation of increased stop rates at the forthcoming bond auction. Ifeoma Onyejekwe, a fixed income trader at UBA, joins me now to unpack the market dynamics in the fixed income markets. Thank you so much, Ifeoma, for your time. So let's quickly preview that bond auction and how that is playing out in terms of market sentiment right now.
For having me. So yes, like you rightly said, we've seen some repricing of bonds to higher levels, especially at the long term. So at the bond issuance calendar, the forthcoming bond auction saw the federal government expecting to borrow about 400 billion in contrast to their regular 225 billion last year. So we can see that they are more eager to borrow more from the domestic market than in foreign markets, and that will lead to investors asking for higher prices. So in secondary market, that effect has already come into play as we have seen traders repricing higher.
And the CRR debit continues to be a very controversial issue, and I want to hear your thoughts about this point that someone drew to my attention yesterday, and which is the fact that with the securitization of the ways and means borrowing from the government, the central bank's balance sheet will look very different, and that could offer an opportunity for some of this CRR debits to get back into the banking system. In your view, how do you think the securitization of that debt could impact CRR debits?
Well, the securitization of the 20 trillion ways and means is not a done deal yet. We've seen rejections from the Senate, so that is still pending. But if that's going to go ahead, yes, like you rightly said, the central bank balance sheet is going to be very, very different, and it's going to cause, a spike in rates across all securities. So we're still waiting to see, when that will happen, supposing it happens at all.
So let's quickly preview your expectations for the MPC meeting next week. What do you think will be the key message from the MPC?
Well, definitely, it is expected for the MPC to increase MPR further, although the increase is not maybe a 50 basis points, not 100 basis points as was done at the last increase in rates. But yes, we'll likely see an increase in MPR rates because we can see, although inflation slightly is, but it's also likely to increase in forthcoming months, as we have seen that there is a pending removal of petroleum subsidies as well as an increase in electricity tariff, among other factors. So we'll likely see the MPR increase.